We're in the midst of a very, very serious car loan crisis. Clearly, when you see trucks like this, it's a shame because they buy it, they drive it, they find that, of course, they get behind on their car loan due to the fact that a lot of these unfortunate buyers, and we've spoken before, the Stellantis group often is associated with a lot of subprime borrowers, and pickup trucks like this are often caught in the crossfire. A lot of people want this, they need it for work, or they just want it because it looks cool and it's jacked up, so they decide they spend a lot more money than they probably should have. Car prices are higher than they've ever been. Inflation, everything else is going up around them. It's not just the car prices, the car loans, but subprime borrowers can see significant increases in interest rates when they're borrowing against some of these vehicles. If you're a subprime borrower, you're probably in that under the 640 score rating on your credit score, and you're probably witness to some seriously high escalated interest rates from the bank. Currently, if you were to borrow money from the bank and you were one of the best credit scores, you're probably going to have as good as a 5.07 interest rate as far as new cars go, and just over 7% you might expect for a used car. But just imagine, slide down this scale and you happen to be one of those borrowers that's considered a really, really high risk. A lot of these lenders don't want to even take a chance on that, and of course they're tightening that up, and a lot of the banks are realizing this risk is too great, especially when a lot of these borrowers are now in a place where they're buying a vehicle for much more than it will be worth if it actually gets defaulted, which in case is actually happening. Case in point, if you happen to fall between a 300 and a 500 credit score, a 14.18% on a new vehicle, or as high as a whopping 21.38% if you have one of the very, very low subprime credit scores, you're going to anticipate some serious lending lack of power, I guess you could say, the inverse proportion to that. And the fact remains, borrowing money from the bank on some of these high-risk vehicles, we know that pickup trucks are in at 80, 90, 100,000 and even more. We've seen pickup trucks, we spoke of previous video, $150,000 and more. So imagine borrowing at a subprime rate of 20% at obviously a vehicle that's got a value that's tagged at $100,000. You'll never be out of being underneath that vehicle. And of course, then you come across some hard times, and that's just where we're at now. Things have gotten a lot worse in the last little bit here, and people are finding themselves having to make some hard decisions, and this is all contributing to these car loan delinquencies. Now, what's a delinquency and what's a default? You hear a lot of different phrases. Delinquency is essentially you're missing some payments. Maybe you're having struggles making ends meet, you're not able to put enough money to get food in your mouth or possibly a roof over your head. But maybe you're late on some payments, but you're still sort of getting along and you're negotiating with your bank and you're making payments, but a lot of times they're late and there's lots of excuses. Delinquency is that. It's where you're sort of like, you're not keeping up. Then there's the default. That's where the banks actually decide they have to take a formal action, and largely because somebody's literally defaulted, the communication's poor, and clearly the future looks bleak for that buyer, and they're having to basically let that vehicle go. The bank has to step in, take legal action, and of course, sadly enough, the default means that you're giving it up. It's going way by the dodo bird. Now, unfortunately, there's way too much of both of those, both delinquencies and defaults. Now, we know there's some tricks that some of these delinquent buyers are actually utilizing. For example, you can renegotiate with your lender. I mean, lenders don't really want to default. They don't want to capitalize on that because part of the problem here is lenders can't get pickup vehicles. They can't actually, there's not enough truck drivers, tow truck drivers, and pickup artists that are basically there to come along and scoop these vehicles and drag them off to auction. There's just not enough buyers, and that leaves the banks in a pickle. We also know that we're in a declining market where used cars and wholesale prices are dropping down. That all compiles together to make a really ugly storm. So it's almost trying to beat to the punch. So the lenders, absolutely, when they find out that they're having to actually default on these vehicles, they're in a position where it's becoming very awkward and difficult, time delay, and they want to get that car off to auction as soon as possible before every single week, every single month, the values of these vehicles are dropping. We're seeing this. So they're not able to recuperate a lot of their money. Did you also know that, by the way, if you happen to default on your car payments and the bank has to take ownership and basically take over and send it to auction, did you realize that they're going to try to maximize what they recoup But unfortunately, if there's any shortcomings, for example, and we know this is happening, people are often paying way too much money for a lot of their vehicles in the last couple of years. But if you're in a position where you were way underwater, the bank is only able to capitalize and get X amount of money out of that vehicle at the auction, which is becoming harder and harder to do every month on month, they're actually having to chase you legally. So the buyer or the person that is actually giving up, defaulting on their vehicle, may not be out of the woods. In some markets, some jurisdictions, and some banks are going to continue to chase you to make sure you come up with that shortcoming. And so people just honestly are in a really, really rough spot. If they're in a position where they're having a default on their vehicle, they can't make payments anymore, and then they're finding out that they still owe the bank another $20,000 on that car payment just because they weren't able to get the full amount, that is a really awkward position. But anyway, other tips, things that people are using as buyers to hopefully get them through the tough times, is possibly refinancing their car loan. Sometimes they shop around. I've always said this too, looking around for your best rates. Maybe you relook at some other lenders, other banks. Maybe you bought originally from the dealership. They didn't give you a real competitive rate. Shop around, and some of these buyers, just to get some of their prices down, they may actually refinance, maybe look at operations where they can get lower rates and drop their payments a little bit. That's another trick. Other things are basically sell your car. Some people, if they've got a car, they've got a heavy car payment, they just want out, they want to slow the bleeding, they basically might consider selling the car, and that's another little tactile trick that some people are using if they're finding themselves starting to become delinquent and running out of time and space and money. They might just sell the car. If they can do that and get a good dollar for it, they might be able to put it down on your the wholesale, what's outstanding on the car payment, and they might be able to walk away scot-free and just get out of that bad situation. Other people are just having to work a second or a third job. I mean, Uber Eats, there's no shortage of people having to hustle out there, doing a side gig, maybe selling, doing social media, possibly making money on the side, doing other side hustles, selling, at lemonade stands. I mean, people are trying to get creative, working that second and third job just to make ends meet, just to top up and make enough money to cover that car loan. And some people are just saying, I surrender, white flag, because it's better to surrender, give it back, and take a little bit of the hit rather than waiting for the bank to come and possess it or repossess it, and then having to face increased credit devaluation of sorts. Nobody wants to see that, because then again, lower credit score, 3 or 4 years, maybe you're in a better financial position and now you're ready to take on another loan for a new car. Sadly enough, your credit score might drop you to subprime area again, 640, 650. As I mentioned in previous videos as well, now some of the banks are getting a lot more critical and not even accepting buyers at anything less than even 680 and 690 these days. They're considering it a higher risk. So that 640 is sliding up the scale. Now here's another example of a truck. This is another Ram that you can see was clearly run through the mill. This is what happens when a lot of car buyers realize the writing's on the wall, the delinquency's there, they're absolutely running out of time, place, and money again, as I said, and they wind up with a truck like this and they run it hard, and obviously sometimes, look at the sticker on the window, sometimes people get, habits get in the way, stress, the mental health concerns, and there's other factors that start kicking in and start hampering, the opportunity to continue making payments, and trucks like this end up back on the lots, heading off to auction. They're going to get dressed up, cleaned up, and then basically off to the wholesale market, which of course they'll fetch $1 or $2, but usually these types of vehicles, after they've been beat up so badly, they often are very difficult to sell, or some of these the buyers are having to put a lot more money back into them, put new tires, fix broken bent fenders, and replace glass, and fix these vehicles up to make them sellable again. So this is an example of what people are doing sometimes if they're not able to keep up with their loan payments. Now this is all very, very puzzling. Interesting, but puzzling, and it's devastating. I personally know people that have been in this situation, actually having to give their vehicles up, and it's heartbreaking to see this, and it's even more heartbreaking to see when people are dealing with problems and just eating and keeping a roof over the head. I mean, buying a $150,000 pickup truck seems a little bit excessive. Can you do with a slightly used $50,000 truck? Or maybe if you need a brand new one, you can get like a Dodge Classic, Ram Classic for, $55,000 or 50 grand. If you need that truck, maybe you need it for livelihood. I mean, it is heartbreaking. It's heartbreaking to see people defaulting. It's heartbreaking to see some of these, the banks having to scoop some of these vehicles up. It's just devastating. I mean, it doesn't take long to look around the streets and see what's going on around, to see, it's getting the better of our society. And unfortunately, car loans are one of the indicators. That's one of the flags and the markers of what's going on as a whole. But I mean, increased loan rates on everything, increased inflation means that loaf of bread's going to cost you $5-6 instead of $1.50 like it used to. It means rent's going up to $2,000-3,000 a month, double, triple from what it was 5 years ago. It means everything's going up, and people are running out of time and place and money again, as I say. And sadly, it's just devastating. I see it. I know people like this. And even myself, I feel the pinch. A lot of us, we all feel a pinch. None of us are billionaires. And the reality is, this is a tough time for everybody. It's even more punishing to see when, a lot of the money being spent and sent out of the country. And that's another conversation. But the reality is, these car loans are becoming a serious crisis. So bad, in fact. Delinquencies and defaults are way up. Specifically delinquencies, which we think about the historical, where some of the bad times were. Like back in 2008, we saw rates as high as 5% of vehicles and loans were delinquent or were going to be delinquent. And then in 1994, we hit a whopping 6%. Clearly a bad time in history for car loans and buyers, and a lot of defaults going on as a result of a lot of these delinquencies. But can you believe it? For the first time ever, we've hit a record high. In September, we hit a whopping 6.1% delinquencies on car loans. It's absolutely devastating. I wish I could say things were on the up and up, but sadly, unfortunately, it's not really the case at this point. Wholesale prices dropping down, but what we don't see is the other factors, and that's car prices dropping down. As a matter of fact, UAW, if you thought you needed a pickup truck from one of the big threes, prices are going up. We also know with electrification around the corner, hydrogen and other technology emerging from Toyota and some of these other manufacturers, this new technology takes R&D, research and development, and that doesn't come cheap. That will be passed down to the consumer. So prices of vehicles are only going to continue to skyrocket. We have a situation with daily living costs are going up. Don't see that dropping anytime soon. And of course, this cycle goes round and round. People are running out of money to pay for this stuff. People are just trying to survive now. And a lot of defaults, delinquencies are on the climb and the rise. It's a serious crisis. And to add all of this, I mean, to insult to injury, we all know that Ford as well patented that auto repossession feature. They haven't necessarily applied it to any of their modern vehicles, acquired the patent to automatically have your vehicle drive itself away from your home. So if you were delinquent and you actually went full default, they will actually have the technology, potentially in coming years, to actually have that vehicle either do one of two things: potentially back itself out of your car lot and put it in a position where it's safe for a tow truck, or it may just drive itself to home base, to wherever that's defined, predetermined location. So a lot of these manufacturers are starting to think ahead. And if Ford's doing it, a lot of the other brands are starting to think of the same way. And everybody loses here. Prime level buyers are losing because they're still paying much higher rates than they ever paid for much higher priced vehicles than they've ever seen. Subprime buyers are buying at phenomenal interest rates that we've never seen before, and rates at which they'll never be outside of being in debt. And of course, the banks are losing. And not that anyone feels sorry for the banks, but when banks feel the pain, people feel the pain, because banks never lose. It's like insurance companies. You have to collect from the bank, or if the bank loses somewhere, they end up taking out of your hide somewhere down the road. So increased interest rates, tightening up on some of the applications for new car loans. They're going to make it more difficult for subprime buyers. They're going to move that 680 to 690 to 700 and up and up and up. It'll just make it more difficult. The economy won't thrive. Manufacturers will sell less vehicles, which in turn reduces, drops people from the workforce. Less vehicles being sold, plants shut down, more potential federal bailouts to get some of these manufacturers back on their feet, and the cycle goes round and round. It hurts the vendors, it hurts the buyers, it hurts the banks, and the economy doesn't help at all either. So it's a rough spot. We're in this crisis. We're all in this together because we're all feeling it in some capacity. But how are we going to get out of this situation? I mean, it sounds bleak. There is potentially an out here, but time will tell. And I just want to share that. So as well, be sure, hope that helps everybody, give you some insight where we're at with car loans and delinquencies and defaults. They are on the rise, sadly enough. But if you want to see more right there about what's going on with Ford and some of the troubles that they're dealing with, hope to see each and every one of you all real soon, and we'll catch you then. Bye-bye.